Ever feel like your money's just disappearing? Like you're working hard, but your bank account isn't growing fast enough? You deserve to take that vacation or buy that cool gadget. But here's the secret. Money doesn't grow by itself. The trick is investing. It's like planting seeds for your future. And no, you don't need to be a millionaire to start. In this video, we'll break down investing in the simplest way possible. No jargon, no confusion, just easy steps to get started. Let's grow your wealth the easy way. So you've been working hard, saving a bit here and there, but somehow your money doesn't seem to grow as fast as you'd like, right? Don't worry, you're not alone. What if I told you there's a way to make your money work harder for you? That's where investing comes in. Investing is like planting seeds for your future. You take a little bit of your money and you put it into something that can grow over time. Stocks, bonds, real estate, the list goes on. But here's the big question. Why should you invest? Well, if you want your money to outpace inflation and build long-term wealth, investing is the way to go. Saving is great, but leaving money in a savings account won't help you keep up with rising prices. In fact, inflation can slowly eat away at the value of your cash. Investing helps your money grow at a rate that beats inflation. Now, I know what you're thinking. I'm no expert. Can I really do this? Well, yes, you don't have to be a stock market genius to start investing. With the right mindset and a bit of knowledge, anyone can get started. Investing might sound a little scary at first, but trust me, once you get the basics down, it's easier than you think. And you might be surprised how quickly you can start building your wealth. What do you think? Are you ready to start growing your wealth with investing? Alright, so you've heard the term investing, but now you're wondering, what in the world is all this jargon? Don't worry, we've all been there. Let's break down the basic concepts and terms you'll need to know to get started. First up, risk versus reward. Every investment carries some risk, meaning there's a chance you could lose money. But the higher the risk, the higher the potential reward. It's like riding a roller coaster. You might get a thrilling ride, but you could also feel a little scared. Next, let's talk assets and liabilities. Assets are things you own that can make you money, like stocks or property. Liabilities, those are things you owe, like loans or credit card debt. The goal is to have more assets than liabilities. Now, diversification is key. This just means spreading your investments across different types of assets to reduce risk. It's like a fruit salad. Don't just put all apples in the bowl. A little bit of everything makes for a healthier mix. And finally, compounding. This is the magical process where your money earns money. It's like interest on interest. Basically, your investments work over time while you sleep. Once you get the hang of these terms, investing becomes much clearer. And believe me, it gets easier as you go. So you want to invest, but now you're staring at all these options like it's a menu at a restaurant. Stocks, bonds, real estate, what's the best choice for you? Don't worry, we'll break it down so you can make an informed decision. Let's start with stocks. Stocks are basically tiny pieces of ownership in a company. When the company does well, so do you. If it grows, the stock price rises. But if things go south, well, you might see your money take a dip. It's like riding a roller coaster. Exciting, but a little bumpy sometimes. Next up, we've got bonds. These are a bit like loans you give to companies or governments. They pay you interest over time, and when the bond matures, you get your money back. Bonds are generally less risky than stocks, but don't offer the same high rewards. Think of them as a slow and steady turtle in the investing race. Then there's real estate, the classic investment. You can buy property, rent it out, and make money from the rent. Or you could buy a fixer-upper, renovate, and sell it for a profit. Real estate can be a great way to build wealth, but it requires more time, effort, and money up front. And don't forget about things like mutual funds and ETFs, pools of stocks and bonds that make investing easier and less risky. It's like having a basket of different investments in one go. The key is to diversify, mixing different types of investments to balance risk and reward. That way, if one investment doesn't do well, you've got others to fall back on. So, there you have it. stocks, bonds, real estate, and more. Understanding the basics of each can help you make smarter investment choices. Okay, so you know you want to invest, but what kind of account do you need? It's like walking into a store full of options and you're wondering, which one is best for me? Let's make this simple. First up, brokerage accounts. A brokerage account is like a general purpose tool for investing. It gives you access to stocks, bonds, ETFs, and more. You can buy and sell anytime, but you'll pay taxes on any profits you make. So it's a bit like shopping, buying and selling whenever you want. Next, there's retirement accounts, like a 401k or IRA. These accounts are specifically designed to help you save for the future, with some tax advantages. The cool part, your investments grow tax-free, or you get a tax deduction up front. It's like getting a little extra help from the government while you save for your retirement. It's like a piggy bank for your future self, but with way better returns. And then there's robo-advisors, perfect for those who want to invest but don't want to make all the decisions themselves. You answer a few questions about your goals, and the robo-advisor picks the best investments for you. It's like having a personal financial assistant without the expensive fees. Robo-advisors are great if you're a beginner, but they don't replace the need to understand the basics of investing. It's like letting someone make your dinner but still knowing what's going into the pot. No matter what platform you choose, the goal is the same: investing your money wisely to help it grow. So, you're ready to invest. But where do you even begin? It's like standing in front of a massive buffet. You want a little bit of everything, but how do you choose the best dish? Let's break it down. First, you need to assess your financial situation. Before you start investing, make sure you have an emergency fund in place. 3 to 6 months of living expenses is a good rule of thumb. And try to pay down any high-interest debt first. It's like making sure your kitchen is clean before you cook a meal. No distractions. Next, you want to set your investment goals. Are you saving for retirement, a vacation, or maybe buying a house? Knowing your goals helps you decide what type of investments you need. The next step, choosing your first investment. Don't worry, you don't need to be an expert to get started. The key is choosing investments that match your risk tolerance and time frame. If you're young, you can afford to take more risks and focus on growth. If you're nearing retirement, you might want something more stable. It's like picking out shoes for a trip. If you're going hiking, you pick boots. If you're going to the beach, sandals. Once you've made your choices, it's time to start investing. With a bit of knowledge and confidence, you can begin building your wealth and watching your money grow. Remember, it's not about timing the market, it's about time in the market. Start small, stay consistent, and watch your future unfold. You've probably seen those fancy charts with wild swings and thought, yikes, I don't want to lose all my money. Don't worry, beginners. There are strategies to help you invest smartly without that roller coaster ride. First up, dollar cost averaging. This strategy is like buying a little bit of an investment regularly, say every month, no matter what the market is doing. You're averaging the price over time, so you're not trying to time the market, which can be risky. It's like buying your favorite coffee every day, whether it's sunny or raining. Over time, you get used to the price, and you don't stress about those ups and downs. Next, we have buy and hold. This strategy is simple. Buy investments you believe in and hold on to them for the long haul. You let them grow over time without worrying about short-term changes. It's like planting a tree and letting it grow tall. Sure, it takes time, but you don't need to keep checking on it every day. The key is patience. Another great option, index funds and ETFs. These are funds that hold a mix of investments, so you're not putting all your eggs in one basket. They're perfect for beginners who want diversification without picking individual stocks. It's like making a salad with all your favorite veggies. It gives you balance and reduces the risk of having one bad ingredient spoil the whole thing. These strategies, dollar cost averaging, buy and hold, and using index funds or ETFs, are great ways to get started without feeling overwhelmed. The best part, they help you grow your wealth while staying calm and steady, even when the market has its ups and downs. So, you've decided to start investing. Awesome. But let's talk about something a little less exciting. Risks. Just like walking down a path, investing has some bumps along the way. First, there's market risk, the possibility that the overall market could drop, causing the value of your investments to go down. It happens from time to time. You might have heard the term market volatility, and that's just a fancy way of saying that prices can go up and down. But hey, don't panic, it's normal. If you're in it for the long run, the market usually bounces back. Think of it like a roller coaster. You may scream a bit, but you'll make it to the end. Next up, we've got individual investment risk. This is when you invest in a single stock or bond. If that company has a bad year or goes bankrupt, you could lose a lot of money. It's like putting all your eggs in one basket. One crack, and you're done. That's why diversification is key. Spread your investments across different assets to help reduce risk. Another challenge, liquidity risk. This happens when you need to sell an investment, but it's hard to find a buyer, or you might have to sell at a loss. It's like trying to sell a vintage vase at a yard sale, but don't worry, you can always find the right time to sell. While risks are part of the game, being informed and understanding the challenges can help you make smarter, safer investment decisions. So, you've made your investments and set your portfolio. Feels good, right? But just like that plant on the windowsill, it's easy to forget about it after a while. But here's the thing, just because you've invested doesn't mean you can set it and forget it. You need to monitor and adjust your portfolio to keep it healthy and growing. The first step is to check in regularly. You don't have to obsess over it daily, but maybe once a month or once a quarter, take a look at your investments. Is everything still aligned with your goals? If you set long-term goals, your investments should be moving in the right direction, but you still want to stay aware of any big changes, like market shifts or company news. Next, you want to rebalance your portfolio from time to time. This means making sure your investments are still spread out the way you want. Maybe one type of asset is growing too fast, and you need to move things around to maintain balance. It's like juggling. You want to make sure nothing is tipping over while keeping everything in motion. As life changes, so should your portfolio. If you get a raise, buy a house, or reach a big milestone, it might be time to tweak things. Your goals will evolve, and your investments should reflect that. By monitoring and adjusting regularly, you can keep your investments on track and make sure they're always working towards your goals. Okay, so you've mastered the basics of investing, and now you're curious about some of the fancier stuff, like options, margin trading, and short selling. Sounds intimidating? Don't worry, let's break it down. First up, options trading. This one sounds fancy, but here's the gist. An option is a contract that gives you the right, but not the obligation, to buy or sell an asset at a specific price within a certain time frame. It's like buying a ticket to a concert. You pay for the right to go, but you're not forced to go. If the concert sells out and tickets become more expensive, you can sell your ticket for a profit. But if you don't go, no harm done. Next, let's talk about margin trading. This is when you borrow money from your broker to buy more investments than you could with just your own cash. It's like using a ladder to reach higher shelves in the store. You can get more, but if you fall, it could hurt. If your investments drop in value, you'll still owe the broker the borrowed money. So, margin trading can be risky, especially for beginners. And then there's short selling. This one's a little trickier. It involves borrowing a stock you don't own, selling it, and hoping the price goes down. If it does, you can buy it back at a lower price and return the borrowed stock, pocketing the difference. It's like borrowing someone's bike, selling it, then buying it back cheaper later. But be careful, it can lead to big losses if the price goes up instead. These advanced concepts are optional and not necessary for beginners, but they can add some excitement to your investment strategy. Just remember, they come with higher risks. So there you have it. You've learned the basics of investing, how to start, what types of investments are out there, and how to manage the risks. Now, you're ready to take the next steps on your journey toward financial freedom. Investing isn't a one-size-fits-all kind of deal. It's about finding the right path for you, your goals, and your risk tolerance. Maybe you're all about growth and stocks are your thing. Or maybe you're more conservative and prefer the stability of bonds. Either way, the key is to start somewhere. And remember, investing is a marathon, not a sprint. It's about long-term growth, not getting rich overnight. If anyone promises you quick riches, run the other way, unless they're selling lemonade on a sunny day. Now, it's normal to have questions. You might wonder, am I doing this right? Or is this the best choice for me? And that's okay. Part of investing is learning as you go. Just don't get discouraged by short-term bumps. As you watch your investments grow over time, you'll feel more confident. The most important thing is to take action. Even small steps can lead to big rewards. The earlier you start, the more time your money has to grow. You've got this. Keep learning, stay patient, and enjoy the ride. Alright, let's wrap this up. You've learned how to start investing, why it's important, and how to grow your wealth. Sounds like a lot, right? But here's the good news. Getting started is simpler than you think. Start by setting clear financial goals. Whether you're saving for retirement, a big purchase, or just growing your money, knowing your goals makes all the difference. Then pick the right investments for you. Stocks, bonds, or maybe even ETFs. It's about choosing what fits your risk level and time frame. Don't worry, you don't need to pick individual stocks like a Wall Street pro right away. And remember, it's okay to make mistakes. We've all been there. Just stay patient and keep learning. This isn't a race. The key to investing is to start early, stay steady, and let time do the work. Before you know it, your wealth will start growing, one step at a time. Now that you're ready to start investing and growing your wealth, why not make it even easier with XTRM Finance? Whether you're a beginner or looking to fine-tune your strategy, XTRM has the tools, tips, and resources to help you on your way. If you found this video helpful, hit that like button and share it with your friends. Let's spread the wealth, literally. Got thoughts or questions about investing? Drop a comment below. Let's keep the conversation going. We love hearing from you. And hey, don't stop here. Check out our other videos on the channel for more tips on investing, money management, and financial freedom. Trust me, you'll want to keep learning and growing. Click the recommended video right here on your screen. It's like finding treasure, but without the pirates. Remember, investing is a journey, not a race. Let's go make some money, one smart step at a time.